Hey guys, welcome back to my channel. Hope you're having a great day and I hope your stock portfolios are finally recovering. They're starting to do a lot better after the last rough couple of days. Today we have a very exciting stock to go over. It's one that you guys have been asking me to do an update on for a while, and that is Churchill Capital, stock ticker symbol CCIV, and their merger with Lucid Motors. Ever since last week when the merger was first announced and confirmed between Churchill Capital and Lucid Motors, CCIV's stock price tanked. It plummeted nearly 50% from a high of around $63 per share all the way down to now around $30 a share. It was a little lower than that earlier in the day. It was at one point earlier today, $27 a share. But either way, it's down 50%. It's down massively from when the merger was first announced. And just yesterday, the CEO of Lucid Motors, Peter Rawlinson, came out and tweeted about the company. He confirmed the merger. He gave us actually an entire report, and he wrote a letter to investors talking about what the company's plans are right now, how they're going to have to push back deliveries on their vehicles. He gives us some reasons why. He also talked about what their plans are for the next couple of months and into the end of 2021. You can find the letter on Lucid Motors' website. We're going to go over everything in that. In addition to this, there's also been a lot of talk about Lucid Motors from other people, such as Dave Portnoy. Like, Lucid Motors and CCIV have been all over Twitter, all over the news, and today we're going to break down everything you need to know because the stock price is looking like it's starting to recover, and I think it could be a very good investment in the short term to make a quick profit on that. But anyways, if you enjoy this sort of content, you find the video helpful, then make sure to like the video down below, subscribe to my channel, turn on the bell notification so you can be notified every time I post a new video, and comment down below your thoughts on CCIV and their merger with Lucid Motors. For those of you who are new here, my name is Michael. I'm an investor and entrepreneur. Last year, our public investing account on Patreon, which is currently sitting around $700,000, was up over 105% for 2020. This year, our goal is to get that account to $1 million, and we're well on our way to doing that. So if you'd like to see the investments I make in real time, when I buy stocks, when I sell stocks, if you want exclusive content that I don't share on YouTube, access to our Discord, pre-release access to our podcast, where I talk about stocks, investing, tech news, well then make sure to join our group using the link down below. We have a limited number of spots left for 2021, for February of 2021, and I don't know if we'll be adding any more in the next month or so. So make sure to check that out if you want to join. But anyways, Churchill Capital, stock ticker symbol CCIV, currently is sitting right under $30 a share. It's been hovering between $28 to $30 a share over the last day or so. And the stock price has tanked since the merger was first confirmed last week when it was at a high of around $63 a share. Many people are wondering what to do next and what is going on with the stock price. Today, it's doing actually fairly well. It's up around, at the time of me recording this, around 7.5%, and a lot of people think it can do extremely well in the next couple of days, and I'm going to give you my take on all of this. But before we go over that, it's important to know that what is going on with CCIV on Twitter. And the first thing is with Dave Portnoy. I mean, he's not an investor, but it's just more people talking about the stock, shows how it's on a lot of people's minds. He said, I had 1 billion people tell me CCIV was the go button today. He bought it. He says he might get killed, but he still bought it. So it's just important to know that everyone is talking about this stock, whether you're an investor, you're not an investor. It's getting a lot of attention, and that brings more people's eyes to the stock price, potentially making more people want to invest. But that's not why you're going to buy it. That's not why I would buy it. You shouldn't focus too much on that, but it's just important to know. Regardless of that, though, according to Lucid Motors, their official Twitter page, they came out and said that earlier this week, we proudly announced our merger with Churchill Capital IV Corp that would result in our becoming a public company and help bolster our mission to usher a new era of luxury electric. They've already announced the merger, and this was just them reiterating it, I would assume, because the market has been down. So they really just said this to give us to give investors a little bit of a positive note, some more news. But in addition to this isn't the important part. If you look at the read more section and you click on that, it brings you to Lucid Motors' website. And it's a note from their CEO, Peter Rawlinson, about the merger, the future of the company, and everything else you need to know. So it first goes on to talk about how The merger has been confirmed. We already know all of that. But after that, when you scroll down a bit more, it talks about the vision of the company, how they have very big plans. They're aiming to be a luxury electric vehicle with goals of not competing directly with Tesla, but they're trying to their model vehicle, their initial models are going to be more competing with, let's say, a Mercedes and a high-end luxury and vehicle, and that's what Lucid Motors is doing. They said right now there is no real or true luxury electric vehicle out there, and that is why they're entering this market first before they start expanding into more affordable and cheaper models later on. They said first, though, they want to enter that luxury market. Then he goes on to talk about production readiness. In the letter, he said, I'd also like to provide an update on the arrival of the Lucid Air. He goes on to explain how, with the pandemic, there have been a lot of challenges with production, getting parts, and he said that despite the excellent progress they've made in all areas, they will not be able to start delivering Lucid Air this spring like they originally said. They originally said that they would get these models off the production line in the spring, but now they will not be able to. Right now, we can expect to receive them and for them to come off of the production line either in the early Q3 or at some time in the fourth quarter of this year. They did not confirm or commit to a specific timeline, but they did say that it's better for them to not try and rush it, make sure the quality is good. They are still chasing down over 3,000 parts from over 250 vendors all across the world, and it just really isn't practical for them to rush these vehicles off the production line with all of the delays and challenges because of the pandemic. And finally, in addition to the note and from Twitter and from Peter Rawlinson, the CEO of Lucid Motors, Bloomberg's Ed Ludlow, he actually had an interview with Peter Rawlinson as well. And on Bloomberg, in the Bloomberg interview, he confirmed that they will be delaying production from the spring until the second half of the year. We don't have a date yet, but they go on to explain how he said that the Lucid Motors should take its time to get the first Air right. They said they don't want to rush this. They want to make sure, you only have one shot to get that first vehicle into the hand of the customers. And if there's a lot of production errors, and if, let's say, there are defects in the cars, that's not going to look good for them. They need to make a great first impression with buyers, and the only way they can do that is making sure that they have all of the parts they need. They don't try and rush this off the production line, and it's better for them just to wait. But right now, looking at the stock price, what is going on with it? So during this video, it's already up again from $29.90 a share up to $30.32. But either way, what I see happening with the stock is after the massive beatdown it has had from about $60 a share all the way down to $30 a share after the merger was first announced, I think we're going to see it recover quite a bit. Even though it already has a market cap, like a valuation post-merger of $50 billion, I think in the short term, we will see it recover just because of all the hype around Lucid Motors and everyone thinking it could be the next Tesla. So short term, I do think there is a lot of upside in this. Long term, however, I'm not personally invested in this company for long term because at a $50 billion market cap, it is just too expensive for me. They haven't delivered a single vehicle yet, and having a $50 billion market cap, that means they're valued at more than Ford Motors, who delivers millions of vehicles a year, and Lucid Motors is valued more than them, but they haven't delivered a single model yet. So I get it that Lucid Motors is a technology play, it's a luxury vehicle, and all the technology behind it. I get that, and I'm not trying to be negative or down, but it's very different when you have never delivered a single vehicle yet. You don't know how customers are really going to like the models. You don't know if there's going to be any defects off the factory line. You don't know what's going to happen. And having never delivered a single vehicle before, long-term looking at this, they need to do a lot of proving. They need to really prove themselves before I would invest at a $50 billion market cap. That's not to say they won't do well in the future. It's just to say, in my opinion, long-term, I think they need to be able to prove themselves, get vehicles off the line, actually show that they can do what all these big goals and all these grand plans that they are saying they are going to do. So right now, short term, I think there is a lot of upside. Long term, you need to wait and look a little bit more to really get a true valuation of the company, see how many vehicles they're capable of delivering, if customers actually like them, if they're able to get more affordable models included as well. So anyways, that's what's going on with Lucid Motors and CCIV. Peter Rawlinson came out and spoke on Bloomberg, and he had that note to investors on Twitter. But I hope you guys enjoyed today's episode, and let me know your thoughts on CCIV, if you're invested in them or if you're not. But I hope you guys enjoyed. Don't forget to get your 4 free stocks, each valued up to $1,600, when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you guys in the next episode.